23, 2 discount 323, 2 interest payable 4500, because the payment is on 1st January 2015 and our financial year closes on 31st of December. All right, everyone? Understand? Subhan?
Yes, sir.
Okay. So what would be Southwest Airline in 2014 income statement and year-end balance sheet report for these bonds? So remember, balance sheet will show the value of the bond 96456. The income statement will be recording interest expenses. Here, the income statement gonna be recording the interest expenses 9636, but the balance sheet will be showing the interest payable plus the bond value. All right, so bond value increased 96. Oh, sorry, this one, my bad, because these two are semi-annual payments. So semi-annual payment is going to increase is the bond value 96,779, 96,779. All right. So did you notice something? It is decreases from 38512 to 3221. So in coming years, so this is just for 1 year, in 2015, 16, 18, 19, and in 20 it will become 0. So here you will be seeing 100,000, because we have just discovered that the value of the bond increases when it is issued at discount. So if you understand all the calculations here, so I want you to solve this illustration. So please pause the video, those who are watching online, and try to solve this. We will be resuming the recording after the breakout room activity. So please take a picture. Meanwhile, I will be creating the breakout room. So I am creating 3 breakout rooms. Okay, everyone. So please respect the breakout room rules. Please turn on your camera and your microphone so that you can discuss with one another, okay? Here we go. Okay, class. We are back from our breakout room activity. Okay, let's do it together. So we have illustration. Kamura Limited is authorized to issue 600,000 of 5% 10 years bond. So this is the trick of the question, that they are authorized up till 600,000 worth of bonds payable. Okay, so actually what did happen here on 31st of December 2014, when the market interest rate is 6%, the company issues 500,000 of bond and received cash 462,808. So this information is extra. So only related information is that we have 5% coupon. Value of the face value of the bond is 500,000. 6% is the market rate, and this is because market rate is greater. So that is the bond price 462,808. So Kamura Limited amortizes the bond discount by the effective rate, effective interest method. That's what we do. The semi-annual interest rates are June 30 and December 31st, which means interest payments are done within a year, within the financial year, June 30 and 31st. So we don't have to create interest payable. All right. So prepare the schedule for 4 semi-annual payments, which means prepare the interest payments schedule or amortization table for 2 years. 2 years mean 4 semi-annual periods. And we have to record the issuance of the bond on 31st of December, the first semi-annual interest payment on June 30, and the second payment on June 31st. So we create amortization table. So the rate is 5% semi-annually, so which means coupon rate is 5% semi-annually, which means 5% multiplied by 6 by 12, answer is 2.5. So this is fixed. So payment is fixed. Interest expense is based on the value of the bond. And remember, it is a discount. So carrying value increase slowly with every payment. And interest expense is always greater than interest payment. And discount must be decreased. Discount balance must be decreased. All right. So these are the values. All right. So what is the issuance of the bond? Our concern is the bond issued at 31st of December. Bond issued at discount. Value is 500,000. So cash received 462. All right. Liability increased by 500,000 and discount will be a debit balance and bonds payable is 500,000. So entry going to be cash discount to bonds payable. And what is the first interest payment? So payment is the cash, expense will go to income statement. So our entry going to be interest expense to discount to cash. Here we on 30th of December, interest expense 3844 to discount, which is 1384, and cash actually paid 1200 So many students they confuse, well, because this is interest and this is also interest. There is no cash paid. No, this is interest payment, and payment is based on cash, right? Because company promised to pay cash, interest, cash every 6 months of 5% annually, and payments are semi-annually. All right, everybody. So this 12,500 would be the cash. What about the second one? Second one is on 31st of December, which means it is under the financial year. So entry is the same. So we have interest expense to discount to cash, not the interest payable. Why? Because this is under the financial year. All right. So we have completed the bonds payable issued at discount. What happened if we have to create a partial interest amounts? So let's see the illustration here. So all of the discount amortization is the same, just entries need to be decided on dates. So here we go. The Google Incorporation issues 100,000 8% bond at 96, which means these are issued at discount because market rate is greater than stated rate. So semi-annually payments are there. The first few lines of the amortization tables are here. So you see 31st of December, they have issued the bond, received 96,000. And the payments are semi-annually. The first payment is going to be on 28th of December of February of next year, 31st of next year. So financial year, accounting year closes at 31st of December. So it means bond issued at 31st of August, which means September, October, November, and December. 4 months interest belongs to 2014. All right, because company has used this amount 96,000 for 4 months in 2014. So 4 months interest belong to 2014. All right. So our entry is going to be, because on 31st of December, so our interest expense, which would be paid on 28th of next year. So remember, our interest expense is going to be here, 4320 multiplied by 462, because this belongs to, this whole does not belong to 2015. 4 months from this belongs to 2014. All right. So it means interest expense 2880 will go to income statement of 2014. All right. To discount table, similarly, the discount, this belongs, the 4 by 12 belongs to 2014. So entry going to be interest expense to discount to cash. No, because cash is going to be paid on 28th of December. So we create liability, interest payable, 4 months interest payable. Interest payable is belong to interest payment. So 4 by 12 belongs to the 2014. All right, guys, you understand?
Yes.
David,
Yes.
Joao Paulo, Miria, Priscillo, Marco, Oliver,
Yes.
Vernon.
Yes, sir.
Yes, sir.
Yes, sir.
Good. Okay, that's all for today's lecture. I would be uploading the assignment 8, and in our next class we will be talking about the bonds payable issued at premium, and we will cover about the equity, honors equity. That's the last topic of the balance sheet that we will be covering for this whole course. Up till now, what we have done the assets, current assets, long-term assets. We have done the liabilities, current liabilities, long-term liabilities. So part of long-term liabilities are bonds at premium and honors equity. We will do in our lecture 15. All right. So that's all for our today's lecture. So see you next week. Until then, take care. Bye-bye.
Bye-bye.
Thank you, sir. Bye-bye.
Bye.